when they approved the Bitcoin ETFs, that was a big deal. I mean, you know, a lot of people who were my friends said, well, I'm not going to invest in that because the government's going to outlaw it. You know, there's no way they're going to let that happen. It's money they can't control. They don't want you to do that. Well, okay. But then the SEC approves an ETF that has it. And I was like, oh, well, that's a little different, isn't it? Okay, you know, maybe you don't believe in it, or, you know, and I'm never suggesting anyone should put all their money in Bitcoin. But to have zero of something that might really go, I mean, I think this will go up 10x, and then I think it'll go up 10x again. I'm talking over a decade, okay? But if that's really what it's likely to do you want to own none of it? I mean, why not have 1% of it or 10% of it? If 1% and you're wrong, so you lose 1%. If you're right, you might make 10x, you might make 100x. So it's that kind of a thing. It's a very asymmetric bet. I mean, like I said, I think we were talking off camera before, and I fully expect Bitcoin's going to go to 200,000.
According to Lawrence Lepard, Bitcoin and gold are complementary foundations of sound money rather than rivals. He characterizes Bitcoin as the digital evolution and gold as the analog version. Lepard sees a bright future for both, predicting that Bitcoin will reach $200,000 and gold will rise to $5,000 an ounce in the upcoming years. His conviction that the world financial system is about to undergo an important change is the foundation of his audacious predictions. According to Lepard, central banks will use significant money printing to boost the value of sound money assets due to the nation's mounting debt and careless government spending. He also emphasizes how mining profits can be boosted by rising gold prices, providing astute investors with extraordinary returns. If you're passionate about Bitcoin and the shifting financial landscape, don't forget to like this video, subscribe to the channel, and turn on post notifications to stay updated. Thank you and enjoy the video.
Bitcoin sat flat. Most of this year, Bitcoin was stuck. There was a big joke about it on Twitter, the meme, you know, the 58,000 club. It just kept hitting 58,000, wouldn't go anywhere, wouldn't go. Gold broke out, and I own both, and I have friends in both camps, and I think the camps should be friends, not enemies. But I found all the Bitcoiners saying, hey, you know, what the hell's going on? Gold's going up, you know. And our shit's not. And I was like, this is the way it happened every, you know, last couple of cycles. Gold is bigger, more widely distributed, more people understand it. It smells it first. Gold moved first. I said, you should be happy that gold's moving because it means Bitcoin's about to move. And it was about the same amount of a lag time. It was like 3 or 4 months. Gold broke out in March, and no, it was more than 3 or 4 months. It was about 6 months. And then Bitcoin really started moving this fall, right? And now it's moved with great authority. With respect to the Trump thing, yes, I mean, I think what happened is, look, gold has had one hell of a year. There aren't a lot of years where gold's up 30% from 2070 to 2700. That's a hell of a good move for gold. And it was ready for a rest. Bitcoin, on the other hand, had just started to move. And yes, I think the final thing that pushed the Bitcoin move was that the Harris administration, well, the Biden administration with what was it, Pocahontas, you know, Senator Warren hates Bitcoin. They hated Bitcoin. They were giving all the Bitcoin companies tons and tons of trouble. There were a lot of worries about what might happen to it and if Harris won. And obviously Trump has signaled, and Kennedy and others have signaled that they're extremely pro-Bitcoin. And you know, you've got now Senator Loomis has introduced a bill for a Bitcoin strategic reserve, which would be a huge thing if the U.S. government started buying Bitcoin and putting it on its balance sheet, the way we have gold as a store of value. So I think that the political, you know, earthquake that kind of occurred when Trump won was extremely positive for Bitcoin, and that really added rocket fuel to it. So yeah, I think that's the biggest part of the explanation. I think that the Doge committee, that Vivek and Elon, they will cut some expenses. They will get us moving in the right direction, and they'll slow down the just absolutely insane spending, and that's a net positive for the country. But I don't think it will be enough to prevent what I call kind of the revolt of the bond market, which I then think is going to lead to what I said earlier, kind of the big print. And I think when the big print comes, our stuff's going to go nuts. I mean, I'm like I said, I think we were talking off camera before, and I fully expect Bitcoin's going to go to 200,000. I fully expect gold's going to go to 5,000 in the next couple of years. So, and I mean, I can assure you, if running a gold stock mining fund, gold goes to 5,000. Oh my goodness. I mean, this stuff is, I mean, all the suffering gold stockholders out there, like you, me, and probably a lot of your listeners who've been wondering what the hell is going on, this stuff stinks. We're going to be very pleasantly surprised, you know, so that's what I see coming. But, you know, it hasn't happened yet, and I could be dead ass wrong, you know, and it's hard to be patient. I mean, I get it, you know, it's really hard. I mean, I'm having a hard time being patient. So totally understanding all the frustration, but I don't know what else to do, because it's not like I want to go buy bonds, and it's not like, you know, I mean, it'd be another thing if the stock market were fairly priced and there were some really good opportunities over there. I'd say, okay, fine, let's go buy stocks. But the stock market is it's a record, you know, if you look at the numbers on the stock market, I mean, we are more expensive than we were in 1929. It's really crazy, crazy overvalued.
Lawrence Lepard emphasizes the value of establishing a solid foundation in financial literacy. The Bitcoin Standard is one of the fundamental materials he recommends beginning with. To take complete management of your Bitcoin holdings, Lepard also advises learning about self-custody. This is because depending on ETFs may be convenient, but there are risks involved, such government intervention or brokerage failures. The overvaluation of U.S. stocks, especially tech-heavy indices like the Nasdaq, is something he cautions about. Lepard warns that because of their exaggerated values, the magnificent 7-inch stocks, which have contributed significantly to the market's recent gains, are susceptible to entering a protracted bear market. On the other hand, Lepard believes that gold and Bitcoin are undervalued assets that have a great chance of outperforming in the years to come. This makes them a safer option for investors looking for stability and long-term growth. Please take a moment to like this video, subscribe to the channel, and click the notification bell for more in-depth analyses of macroeconomic and cryptocurrency trends. Now let's get back and hear what Lawrence Lepard has to say.
I always say to my clients, the only wrong allocation to Bitcoin is 0. And gold and Bitcoin are different. They're both sound money assets. I call gold analog sound money. I call Bitcoin digital sound money. Bitcoin is growing faster than gold because it's on an adoption curve and it's got a lot more asymmetry than gold, but there's a price to that, and the price is volatility. You have to understand that we've had 4 or 5 cycles where the price of Bitcoin has gone down over 50%. So, and so the time where I've seen people get hurt is they buy Bitcoin, it goes down 50%, they panic and they sell it. Because if you wait 4 years, it always comes back and goes on to a new high, but you've got to understand what you're buying. But back to how one goes about buying it, I think you make a decision that you want to buy it. You can buy it through an ETF. You could do self-custody. There are reasons to do that, but it's more complicated. And I think maybe you start with probably the best book on the subject, which is a book called The Bitcoin Standard by Saifedean Ammous, A-M-M-O-U-S, widely available on Amazon. It's probably the best-selling Bitcoin book by far, and it will really kind of walk you through and explain the investment case for Bitcoin and then how you do it. And then beyond that, there are some other books that kind of teach you, some of the subtleties about how the network operates and self-custody. And, it's a big rabbit hole and you kind of got to go through it. But if you just, the beautiful thing, one of the big positives that happened this year, and I think actually did drive the Bitcoin price a lot, and I was shocked it happened, to be honest with you. I thought they wouldn't do it. When they approved the Bitcoin ETFs, that was a big deal. A lot of people who were my friends said, well, I'm not going to invest in that because the government's going to outlaw it. There's no way they're going to let that happen. It's money they can't control. They don't want you to do that. Well, okay. But then the SEC approves an ETF that has it. And I was like, oh, well, that's a little different, isn't it? So, so now if you have a stock brokerage account, you can say, buy me FBTC or buy me IBIT, and you effectively own Bitcoin. Now, you don't entirely own it. You own it as a proxy through a brokerage. And if that brokerage fails or if the government decides to seize all the Bitcoin, you've got a problem. And that's another layer that's down the rabbit hole that leads to self-custody, which means you've got to get your own cold wallet and you've got to learn how to self-custody. You got to learn how to store it. You don't learn this overnight, but it's imminently learnable. And any Bitcoiner that if you have a friend who's a Bitcoiner, they'd be happy to teach it to you. There are tons of videos and books that teach it. There's a guy on Twitter called BTC Sessions. He has an enormous number of videos, and you just go watch those, and pretty soon you'll be a Bitcoin expert. You'll feel very comfortable having your own coins and self-custodying, and you'll have what I consider to be the most asymmetric bet out there. Again, I would really encourage people to go to my Twitter feed, look back a day or two, and click on my presentation, because there's some charts in there that show the performance, the relative performance of Bitcoin, gold, and the S&P. It's just crushing everything. And so, if, as I say to people, okay, maybe you don't believe in it, or, and I'm never suggesting anyone should put all their money in Bitcoin, but to have 0 of something that might really go, I think this will go up 10x, and then I think it'll go up 10x again. I'm talking over a decade, okay? But if that's really what it's likely to do you want to own none of it? Why not have 1% of it or 10% of it? If 1% and you're wrong, so you lose 1%. If you're right, you might make 10x, you might make 100x. So it's that kind of a thing. It's a very asymmetric bet. The Magnificent Seven and the US stock market at record highs have kind of been sucking the oxygen out of the room. So the average investor, if you own Apple, you own all those other, stocks, you own the Nasdaq, the triple Qs, you've done pretty well for, the last 10, 15 years. And, you're going to stick with it. It's kind of like, this is working. Why should I leave? And, NVIDIA, good God, there have been some killer stocks, right? So that's one. So people don't think they're doing anything wrong, even though all those stocks are at record valuations. And I think are at very great risk of eventually entering a bear market. I'd say the second thing is, that the gold stocks, it's a spread business where you're making the difference between the price of gold and your cost of mining. Cost of mining is your what they call your ASIC, your average sustaining cost to pull an ounce out of the ground, and that's going up with inflation pretty consistently every year. ASICs used to be, a few years ago, they were $1,000 an ounce. Now they're $1,400 an ounce. And in 5 years, they'll probably be $1,800 or $1,900 an ounce. So you need higher gold prices to keep your margins the same. And I think what's going on is, as I said earlier, I think a lot of people kind of believe that this 25, 6, 700 price, it's an anomaly. I'm seeing a lot of models out of Toronto and other places. We're going back to 2,100. You get on Bloomberg and you Google analyst consensus estimate for 5-year out gold prices, it's like 20. It's like 2,000, or maybe 2,100. Well, guys, 5 years out, I think gold's going to be 4,000. So, and I think as a result of that, people are saying to themselves, well, these stocks, if gold goes back down and we know there's inflation, so their mining costs are going to go up, their margins are going to be shrinking, why should I own them? And so what needs to happen is we need to have that psychological shift where people go, oh, you know what? Gold's not going back down. In fact, gold's going up. In fact, gold's going up a lot. And these margins are, and yeah, there'll be 10% inflation in the ASICs, but guess what? The price of gold's going to go up more than 10% a year. So the margins are going to be growing. And then suddenly everybody will be discounting and building models on $3,500 gold. And I can assure you, my companies that I've invested in, they're doing really well they were doing well at 2070. They're doing great at $2,500 or $2,600 gold.
In his concluding remarks, Lawrence Lepard highlights the importance of strategic allocation and diversification in relation to sound money assets, such as gold and Bitcoin. He emphasizes Bitcoin's asymmetric potential for disproportionate gains over time by advising that the only wrong allocation to it is zero. According to Lepard, Bitcoin is digital sound money, and gold is analog sound money, both of which are essential components of a portfolio. He emphasizes how Bitcoin's adoption curve has allowed it to grow quickly, recognizing its volatility, but highlighting its demonstrated resilience through cycles of sharp drops followed by all-time highs. He advises educating yourself, beginning with fundamental materials like the Bitcoin Standard, and looking into self-custody options for complete control over your assets in order to reduce the hazards connected with Bitcoin ownership. Lepard also compares the current state of the market. Bitcoin and gold are still relatively cheap and have room to grow, whereas U.S. tech companies, especially the Magnificent Seven, are overpriced and susceptible to a bear market. According to him, Bitcoin might see 10x to 100x returns over the next 10 years, while gold could reach $3,500 or even $4,000 in the next years. His main takeaway was to not pass up the chance to use sound money assets as a hedge against inflation and market volatility. A small investment in gold or Bitcoin might yield life-changing returns, making them essential parts of an innovative investing plan. To wrap up the video, don't forget to like, subscribe, and turn on notifications to stay updated with similar content. By engaging with the video, viewers help improve the channel's visibility and growth through YouTube's algorithm. And as always, happy investing.